and that NFL season should provide a meaningful boost in engagement, the NFL season. Joining us now is the analyst behind the call, BofA Securities, Mihir Bhatia. Thought that the student loan cancellation of debt and postponement of payment was a headwind for SoFi.
Hi, Sarah. Thank you for having me. No, you're right. For the last 2 years, students haven't had to make payments on their student loans. And as a result, they weren't really thinking about, refinancing those loans to maybe a better rate or a lower rate away from the federal loans market. What the Biden administration announced was that, in addition to the debt, forgiving some debt, they also announced that this will be the final extension of the payment moratorium. As a result, what you're going to have is a lot of loan servicers reaching out to borrowers, letting them know that, hey, you're going to have to start making your student loan payments in the next starting in 2023. And we think what that's going to do is drive refinance volumes back to normal levels at SoFi. SoFi was doing $2 billion of refinance volume a quarter heading into before COVID, and they were down to 400 million last quarter. So we think that's going to bounce back pretty nicely here as borrowers think about the fact that they're going to have to start making those monthly payments, and they try to find a lower rate, frankly.
The stock is still down about 60% over the last 12 months. And then on the NFL season, we know they have the name of the LA Stadium, which won the Super Bowl last year. Right. Is this a marketing thesis here?
No, it absolutely is marketing. It's interesting. We did some analysis around just engagement, user engagement, Google Trends searches, app downloads for SoFi. And it's pretty remarkable that there's a nice uptick typically around Sundays and Mondays, and even more so when it's LA Rams home game. And SoFi, you see the benefit in engagement. And, you had the CEO also mention at a conference just this week, they gave us some internal numbers where, a brand awareness went from 2% to 8% last year during the NFL season, and it's now back down to 4%. And they expect it to increase further this year.
So you have a $9 target, Mihir. The street is worried about the turn in the credit cycle, higher interest rates, more speculative names like this that have been recently come public. Do you think it's overdone?
We think so. I would point out that, we had downgraded the stock previously just on some of the concerns you mentioned. But we do think what's happening now is that there's a fundamental improvement in the operations, right? Now, whether the stock gets to 9, in the short term, it's a little more difficult to say. Certainly, the market is a little more challenging now. But I think it's inarguable that the operating fundamentals for SoFi are going to improve as student loans come back. That is one of their most profitable businesses. It is their oldest business. Also, on the engagement side, you have seen a nice uptick in member growth. You're starting to see them monetize their members, adding more products and increasing engagement. So we do think that the business is going to be operating at a higher level, and operations will certainly improve. And we think valuation will follow.
Mihir, thank you. Barb, I don't think of you typically in a name like this, but would you be interested because of valuations?
Anytime a stock is gotten cheap and it has growth drivers, just as described, I think one has to take a look. So, yeah, I'm intrigued by his analysis.